Welcome back to Balancing Acts. We're talking about year-end tax tips and all things that you need to know to prepare for January. I'm your host, Linda Hamilton, a CPA, certified exit planning advisor, and systemologist. And we're talking with Alana McNichol, a CPA and MBA, and the tax director of Linda A. Hamilton CPA LLC. Alana, I think we've talked about a lot of things that people can use to get ready for next year. But let's talk about what's on the IRS's mind. What are some hot topics, maybe audit issues, hot buttons, so to speak, that people should be aware of?
Yeah, it's a great question. And I think none of this is to scare you, right? We want you to know this information and help you be in compliance. But the truth of the matter is IRS has gotten a significant amount of funding over the past 3 years, and they're putting those dollars to work to try and close the tax gap. And that simply means that they have more tech available, they have more information available, they've got real-time systems. And so what you need to do as a business owner is make sure you're audit proof. Be prepared for whatever the IRS might throw at you. I think one of the funniest things that I've heard about this year is what are called emoji audits, which is where the IRS has access to your Venmo, for example. Okay, they see a pizza emoji and a $20 transaction. Yeah, looks like somebody's paying for pizza. They see a pizza emoji and a $2,000 transaction. Is that really pizza? Are you raising some eyebrows? So be cognizant that this information is out there. It tickled me, but it's true. Hot topics as far as audits go. Well, one that you and I have talked about, Linda, and the one that comes up fairly frequently is S corporation compensation. So basically, if you have an S corporation, you are required to pay yourself reasonable compensation in W-2 format. And reasonable compensation is a tricky question. You must spend time carefully determining what you would pay an employee to do the job that you are doing as a business owner.
And how much you would pay for employees to do the job when you wear that many hats in doing your business. And some of those are maybe lower. So the reasonable compensation is it becomes important when you take things out of your business that you didn't put through payroll. So let's say, people say, well, I couldn't afford to pay myself, but you took out $2,000 draw for this or a $3,000 draw, and you're just taking money out and not taking taxes out. That's how you get in trouble, because the IRS says you cannot take any money out for personal expenses or what they call distributions or draws until you've paid yourself reasonable salary. So you want to make sure that you have that. We've done other episodes on this, and you can find out more if you get in touch with us as well. Very important. Any other hot topics that the IRS has on its radar?
I mean, I think historically, one of the hottest ones that's never going to change is travel and entertainment. So this is a hot topic because the documentation requirements around travel, meals, entertainment are pretty strict. And we know that they're just not being followed. IRS knows that. So it's an audit win for them, basically. So let's talk about a few things here. The first is auto. By nature, an automobile is either personal or business, and you've got to keep track of whether it is personal or business. You've got to have airtight records that will enable you to prove what miles you drove for business purposes or what expenses you incurred for business purposes, depending on how you're accounting for that. And that usually means contemporaneous records. And I think a lot of people will sort of estimate this number at year end. And even if it's got common way to do things, it's not going to hold up under audit. So be really careful with auto. It's a very common expense, right, when you're self-employed, but the traps are there for sure. And then the other big one is business meals. So business meals have very specific requirements around when is a meal actually tax deductible. And you've got to have a receipt that substantiates the business purpose of that meal. And so is it you're meeting with a vendor, a client, a prospect, whatever it is, you've got to have those records and they've got to be very specific.
So you mentioned the word contemporaneous. Why don't you explain what that means?
Sure. Contemporaneous basically means you're documenting expenses as they are incurred rather than at year end coming up with a log or, combing through your calendar. Now, it's not to say that you will be denied a deduction because you put together your records after the fact, but how much harder is it to do that? I mean, who wants to sit down in January and look back at all the trips they've taken? Is it even possible to do that? It's far easier and actually doesn't take a lot of time to do this kind of documentation upfront as you go. There are apps out there that will let you track mileage. There are free apps out there that will let you track mileage. So the tech is there, the tools are there, just use them.
That's really great advice. And I would say, one of the risks of waiting till year over is if you had an audit, they might challenge you and say, because you can tell maybe when you created it, if it's not in pencil or, and they might say, well, how did you remember that you did that? Because what their challenge is they're going to say, how do you know you're right? The closer you are to when it happened. So one of the easy ways to do might be you could take your Google Calendar or your Apple Calendar or your Outlook calendar and maybe write a note right in there when you made the appointment about what you're going to talk about at that meeting and who it's with. That would be a great way for at least documenting the business meals to get that done, because we know business owners are so busy. That's even why IRS knows it doesn't get done. It's because there's just tons of things we have to keep up with, balance in our lives, and paperwork is generally people's, least favorite subject. So it's document, document, document. I don't know, in terms of apps, I guess the apps, are there expense apps too, or tracking meals, or is this only for mileage?
Oh, wow. We're living in a golden age of technology as far as small business owners go. I mean, there's so much tech out there, and what we need is pretty simple, right? For any kind of expense deduction, you need a photo of that receipt. You need a memo field to say what it was for. You need it ideally to live in a place for all eternity, right? I mean, there's so much out there. Your credit card company has an app. QuickBooks has an app, Xero has an app, you name it, it's available. So the most important thing is to pick a system, stick with it, and get in the habit, right? I mean, this is all really about repetition. And I think it doesn't have to be complicated. It doesn't have to be expensive. It has to be repeatable. It has to be easy. And it's a muscle memory and a habit, just like any other thing. And as far as compliance goes, another topic that I wanted to bring up, Linda, that you and I talk about a lot is employee classification, contractors versus W-2 employees. And I'm bringing this up because a lot has changed recently about the way that the IRS asks you to look at how you classify whether somebody is an employee or a contractor. So I can't get too into the weeds because these tests are very complicated and very specific. But what I will say to you is, at the end of the day, the government is looking for you to put people on W-2s, right? I mean, that's really the subtext here. So if you have classified somebody as an independent contractor, you have to make sure that they meet that definition. Who is controlling the work? Who is controlling the schedule? Who is supplying the materials for the work? All of these factors really go into determining whether or not somebody is an employee. And the penalties for misclassification can be tremendous.
And you can even be responsible for paying someone's taxes, because the reason IRS wants you to put them on a W-2 and payroll is because they get paid more quickly when you take taxes out of their check and there's no deduction. So you want to protect yourself there. Again, I think you made a valid point. This is not to scare you, but at the same time is nobody likes these things to blow up on them. You're running a business. You want to be successful at your business. So train yourself to document expenses, train yourself to try to be, cautious. It doesn't cost that much more to put people on payroll. Alana, how can people find you on LinkedIn or Facebook? What should people do if they'd like to get in touch with you? And what is your website?
Yeah, so our firm website is www.lahcpas.com. You can find us there. We've got an email, hello@lahcpas.com. Shoot us a note. It will come to us. I am also on LinkedIn, Alana McNichol, and I'm on Facebook too. You can find me there.
Thank you, Alana. I hope you got something out of this. In real estate, it's location, location, location. And in taxes, it's document, document, document. So we hope that you will do that and that you'll listen to all the segments, take advantage of deductions you can pay in advance, look to whether or not you should defer income, and meet with your accountant at before year end. Meet with them in the next week or two. Is there anything you can do to minimize your taxes this year? And we hope you'll come back next week for another episode of Balancing Acts. Thank you.
This has been a Now Media Networks feature presentation.